Thank you very much. I come to not shatter your illusions about money and finance, but to dissolve them, I hope. And you're not alone if you have these illusions. They're illusions shared by economists and bankers and others too. Most of us believe that in order to invest, to decarbonize our economy, we have to first accumulate savings. We have to accumulate a surplus in advance of investing in productive activity. Now, this was true before 1694, when the Bank of England was founded. But since then, the reverse happens. Credit creates economic activity. Economic activity creates income, and income generates saving, the very reverse of what we're mostly taught. And I want you to just take that in slowly. Credit creates economic activity, which generates income, which generates savings. Now, UNEP has said that we need to find something like $1.3 trillion a year until 2050 to decarbonize the global economy. And that sounds like an awful lot of money. It's about 2% of our gross domestic product, global gross domestic product. But actually, it won't be difficult to achieve at all. Back in 2008, 2009, in 1 year, almost in an instant, the Federal Reserve, the Bank of England, the Bank of Japan, and the European central banks conjured up $14 trillion to bail out the financial system. And thank God they did. Now, what happens in a financial system is that the central bank creates credit literally out of thin air. And I won't go into the detail. You can explore it further if you want. But literally out of thin air, they create $14 trillion, say in this case, but or in the case of Japan, Governor Misaka Shirakawa created overnight, in a week, less than a week, $3.7 trillion to finance the reconstruction of the Japanese economy after the tsunami a couple of weeks ago. And what normally happens is they create this money, and the money is then supposed to cascade down through the financial system, through the banks, into productive economic activity. And that's what's been happening since 1694. Now, of course, for that to happen, we need a banking system that does that, and the banking system that cascades the money down into the economy and finances that which you and I think, which society thinks is important. And sometimes the banking system gets broken, as it is now, and doesn't do that. But when it does it really well. And we live in systems which are really banking systems which are well developed. If you go to parts of Africa, their banking system doesn't work, and they walk around with bags of money and wads of naira or whatever, because they don't trust their banking system. Ours works well. So the point about this is this, that we need $1.2 trillion a year for the next 50 years to finance the decarbonization of the economy. It's easily affordable. Why? Because all that money does is enable us to do what we can do. We can't do more, otherwise we get into difficulties. We might, if we create more credit than we're capable of doing, we create inflation. If the central bank and the banks create too little credit, that contracts our economic activity and we get deflation. If we create credit at very high rates of interest, that is both financially unsustainable, people go bust because they can't repay their debts, and it's also ecologically unsustainable. And if we create more credit than our labor is capable of, again, it won't work. So money is only the thing that enables us to do what we can do. And we can afford what we can do. But just as work makes things affordable for an individual, so too for society. A nation's prosperity follows from its employment, not the other way around. That's the big idea I want to share with you tonight. Thank you.